Welcome to our fourth quarter and full year results, but also a short-term outlook. It's just a year ago I became the CEO of Galp, and what a year it's been. We have a new purpose. Let's regenerate the future together. This has resonated in our organization. It's also the foundation for our new strategy, a strategy in which we will thrive through the energy transition. This year we started on execution. And the first steps was to get the right organization in place, to refresh our XCOM. Now just 5 of us, helping us to be lean and agile. You'll hear from the other 4 later. It's a strong team, and I think you'll agree. We put in place a new people strategy to make sure that Galp is a great place to work. And lastly, we've already made important first steps to realize our new strategy. So let's look at the results. They're robust results with an EBITDA of 2.3 billion euro and 1.9 billion operational cash flow. Although these are robust results, we had headwinds, including gas sourcing issues, extra LNG regas costs, and the refinery incident in Seanish in October. In total, these impacted us by about 180 million euro in the year. These are one-off. We also spent just 0.5 billion euro of net capex. This is at the low end of our range and benefited, of course, from the cash proceeds from the GGND sale. In addition, we were impacted by a large working capital build, 0.6 billion of which is attributed to transitory effects from gas hedges. This will be reversed in 2022, but it has reduced our free cash flow from around 1 billion euros to 0.4 billion euros. And it's raised our net debt to EBITDA ratio from about 0.8 to 1.1. Philippe will deep dive into the details, but this effect is entirely transitory. Such is the confidence in our financial robustness, the board has proposed a discretionary adjustment related to 2021 of 150 million euro, despite the net debt to EBITDA being above 1. At the same time, we took the opportunity to revise our whole distribution framework, and after consulting extensively with our shareholders, we've decided to use share buybacks for this supplementary distribution. So on top of the base of 0.50, we will distribute the 150 million euro as a share buyback this year. As we have confidence in the resilience of our free cash flow growth, we will also increase the base distribution per share and escalate it at 4% per year, already starting in 2022. So this year we'll go from 0.50 as a base to 0.52. We will continue to reward our shareholders with supplementary distribution whenever our net debt to EBITDA goes below 1. And we'll do this now through buybacks, when we will pay up to 1/3 of operational cash flow, not CFFO, to shareholders when we get below that 1 net debt to EBITDA. We think going to operational cash flow will closer track our operational performance. We think these distributions are more predictable. They show confidence in our cash flow growth. And now with the buyback reflects our real confidence in our long-term plan. So in terms of our strategy execution, let's review what we've achieved so far. It's a year where we made progress both in our legacy businesses, but also a lot in our new businesses towards our strategy execution. Firstly, the legacy business, Upstream. What an amazing year. amazing cash generation, record high EBITDA and cash flows, despite having some restrictions, particularly in Brazil, due to COVID. But despite that, we put new production units online in Sepia, but also in Mozambique. Coral FLNG is now on location. These new units, in combination with infill drilling, will allow us to maintain our production flat through the coming years until Bacalhau comes online in 2024. Now, in 2021, we sanctioned Bacalhau. This is an amazing project. Low break-even prices, low CO2 footprint, and Bacalhau coming online underpins our forecast of 25% production growth by 2025. But in addition to this exciting growth plan for Upstream, we also have an exploration portfolio still to complete in some very high-profile prospects. Now looking at the Downstream and our transformation businesses, we have concentrated our refining assets in Sines. But last week you announced a new vision for our Matosinhos site as a new innovation hub. This is a prime piece of real estate which has significant value for Galp, but also the whole community. Our changed refinery footprint to just Sines reduces costs, lowers emissions, and improves our refinery margins and our long-term resilience. We're making great progress in Sines towards an FID for an HVO unit later this year, but also a really good progress to 2 world-class 100 megawatt green hydrogen projects. More from Torre on Upstream and Industrial from the website. If we then move to commercial and look at our legacy commercial businesses, they are following market trends. We are embracing new concepts with new stores, increasing our non-fuel retail. This is delivering at above pre-COVID levels already. But we're also growing renewable electricity sales and maintaining our leading position in EV charging in Portugal. We're also growing our distributed solar business and integrating that within our commercial offer. Although commercial volumes are really just still recovering in Iberia, we've been really active in transforming this business. And you can hear more from Teresa on that business. Now moving to energy management. Energy management suffered in 2021 due to the high regas costs, the gas sourcing restrictions, particularly in Q4. This has depressed the results. But I have to say, we have a new organization in place and we've recruited some top quality people. This is a business that covers crude, oil products, gas, LNG, power, CO2. But not just Iberia. For instance, in Brazil, we're currently unlocking significant value by gas marketing, selling our own gas, but also third-party gas into this now liberalized market. We're only just 6 weeks into this, but we're already seeing the returns. Going forward, we see an overall contribution from this team across all the businesses of around 300 million euros by 2025. Not all of those are captured in the energy management numbers you'll see. Some of them are integrated to the business. And we think we can deliver almost half of this 300 million already in 2022. I think there's much more to come from this team over the months and years to come. And in renewables, I'm really excited that the new renewables and new energies business is now led by Jorgos. I think he'll bring great experience to Galp. But we have been building our portfolio, now at 4.7 gigawatts in the funnel. And in the last year, we added almost 400 megawatts in Iberia and also 600 megawatts in Brazil. We're gaining real confidence in being able to deliver 4 gigawatts by 2025 and 12 gigawatts by 2030. This business at The moment is benefiting from delivering into the merchant market in Iberia. We've got about 1 gigawatt online today. But also the new energies business. I was so excited in December to cement our joint venture with Northvolt, the Aurora joint venture. We plan to build the first lithium conversion facility in Europe, but also the most sustainable one in the world. This is a business where the lithium hydroxide is in high demand, showing exponential demand growth. Please listen more about these businesses from Jorgos online. But it's not just progress in the businesses. Also at the corporate level, we've been supporting business transformation. Galp is the first integrated oil and gas company to successfully go live across the organization with the new SAP for HANA ERP. Putting this place has shown incredible teamwork. Let me just summarize our strategy, our refreshed strategy. Half our capital of 0.8 to 1 billion euros net capital a year is going to be spent on low and zero CO2 energy products, like renewable electricity, like hydrogen, like battery value chain, like biofuels. We see forecasting operating cash flow grow to 2025 and then to 2030. We see upstream growing and other low-carbon businesses growing even faster. But as we invest in these businesses, we will always retain discipline in the returns we expect from both our legacy and these new businesses. We have a very clear decarbonisation roadmap. We are committed to be net zero CO2 by 2050. On the way there, we will reduce our absolute Scope 1 and 2 emissions by 40% by 2030. We'll also reduce the CO2 intensity of the energy we produce in renewables and upstream by 40% by 2030. And in the products we sell to our customers, to our end customers, by 20%. This is all from a 2017 base, and we are making substantial progress already on this ambition. By concentrating our refining assets, we've already reduced our Scope 1 and 2 emissions by 28%. By integrating our renewable business, the CO2 intensity of what we produce is already reduced by 13%. By increasing our renewable electricity sales, we've reduced the CO2 intensity of the products we sell to customers by 4%. But despite this, already in parameters such as the CO2 intensity of the products we sell to our customers, or the CO2 intensity of our upstream production, we're already leading. In upstream production, for instance, our CO2 footprint is half of the industry average. But further to that, amongst the integrated, we already demonstrate that our ratio of our renewable production to oil production is already leading. In other words, we're producing relatively more renewable energy. By 2025, we expect this ratio to be several times our nearest competitor. So in summary, we believe we have a leading energy transition strategy, and we will be able to transition faster than all of our competitors. We believe we have a really distinctive investment proposition. To summarize, we're growing our established businesses, particularly our world-class upstream business. But we're growing our low-carbon business even faster, creating new opportunities for portfolio growth, not only in renewables, but hydrogen, biofuels, battery value chain. At the same time, we offer what I think are really distinctive competitive distributions. We've revised our framework to demonstrate we have confidence in the growth of our business and the value of our plan. We are so confident in this resilience and competitiveness of the distribution framework. We believe that this year, with the macro we expect, we'll be able to distribute 1/3 of our operating cash flow to shareholders this year. Now I invite you to watch the videos of my colleagues from the businesses and from Philippe with a financial overview. Thank you very much for listening. We're looking forward to a great 2022.